Shut up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real options trades in real time together. Let's get right into it. First things first, if you want to follow along, make sure you have your brokerage account open and ready to go. Make sure you have your YouTube video quality setting as high as possible. It helps you read the numbers a lot easier. Have a calculator with you if you want to do some easy math. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right, let's look at our open positions. As you can see right here, we're pretty much flat across all positions. Nothing's really up or down. Roku, we opened yesterday. We opened at 62, slight gain there so far. Square Block, we opened at 30, slight loss there, but again, we're already trading November, so we've got a long time to go till November, okay? Rivian, we're now making money in Rivian. It was down yesterday, now we're up today. DraftKings, what do we open at? 52. Making money there. And Macy's. Macy's gone a little bit against us today, but we're still up $4 in that one. So nothing good, nothing bad happening today, okay? First thing we're going to look at is Kellogg and Kellanova. Let's see if they have options trading yet. Here's Kellanova. We tried looking at this one yesterday, but there were no options. There are now. Let's switch to calls and puts. No volume, so that means no liquidity. So we'll skip that one. Let's go back to Kellogg. There was a split that just happened. No options yet for this one. A shame, they're down big. Yeah. Give this one a couple days. Maybe it'll have options come up soon. Next, we're going to look at McCormick, MKC. I think this is a post-earnings move. Let's see. Earnings were today before the open, hence the big move. Big move down. Here's the chart. Ugly. Let's look at the options, see if there's anything worth it. In November, nothing. Too illiquid. Not enough volume. There's a little bit on the call side, but the spread is too wide. Next, let's look at Veralto. No options for that one. Shame. Down big today. All right, let's keep moving. HPQ. In the news today, I think they got a double upgrade from, was it Bank of America? Bank of America upgrades HP to buy. Yeah, so double upgrade at Bank of America. Earnings are November 21st. That's great. We got plenty of time then. Here's our chart. Had this bounce right here. So that means it could keep going. Whatever positive news it had today, it's already sold off. So let's look at the options. Liquid, that's good. On the put side, if you want to sell the 24 and buy the 22, it's only $200, so this is good if you have a small account. 33 minus 11 divided by 2 divided by 500. That's horrible. Never mind. Skip the put side. On the call side, you don't want to go with the 28. It's too close. If you want to sell the 29, you have to buy maybe the 31. Not very liquid. Let's see. 20 minus 6 divided by 2 divided by 200. Only 3.5% return on that one. We're just going to skip this one too. Next, Coca-Cola. It's getting clobbered lately, no? Yeah, wow. This post-earnings move should catch a bounce here around 55 or so. Yeah. Let's see. On the put side, when are earnings first? Earnings are October 24th. So maybe on the put side, Earnings usually aren't a big mover for Coca-Cola, so you don't have to worry about that one. If you are, do a put spread. If you sold, same thing. The 52.5 is too close. The 50 is too far out. If you want to sell the 52.5 and buy the 50, that's 54 minus 24 divided by 2 divided by 250. That's 6% return. Don't forget, this is including the volatility of earnings. That's why. We go ahead and sell this one. It's very close though, so just know that you're only risking $250. Sell 52.5 and buy 50. Go to verticals. $2.5. The 52.50 will go for the ask. So we're going to sell one November 52.5 of the put and buy one November expiration 50 in the put. Going to receive a credit of 32. We're only risking $250, okay? I'll preview that. Buy to open, sell one to open. We're going to receive a credit of $32. That's important. Good to go. We'll send that out. Probably going to get filled fairly easily because it's such a liquid stock, okay? And most likely, unless there's some big move up in the next couple days, which there could be, we'll have to hold this one through earnings otherwise, okay? Next, Eli Lilly. Earnings for Eli Lilly are November 2nd. We've got less than a month. Here's our chart. Let's had this move down recently. Maybe look at the puts here. Some volume. Not great though. Man. We got a 30-cent spread here. I mean, it is a $523 stock. Let's see, if you sold the 460, bought the 450. That's 480 minus 365. Divide that by 2, divide it by 1,000. 5.7% return on the put side. On the call side, liquidity is even worse. Let's skip this one. Next, we'll look at the XLE, holdover from yesterday. No earnings on the XLE. This one's tough. On the put side, if you want to sell the 80 and buy the 75, what do you get? 70 minus 27 divided by 2 divided by 500, only 4.3% return on the put side. On the call side, if you sold the 96 and bought the 101, that's 73 minus 24 divided by 2 divided by 500, almost 5% if you sold the call side. And this is an ETF, so it's not as volatile as single stock, you know? Where's the 96 on the chart? 96 is right about here. It seems fairly priced. Yeah. I wouldn't be opposed to the call side. Keep moving down, probably get a bounce around 80 or so, maybe 79. We'll keep the XLE on the list. If you wanted to make a move today, definitely sell the call spread. Target is next. TGT. Ugly chart of Target. I think we talked about this one yesterday. Still waiting for it to get maybe to the 95, 96 area, maybe even 100. We're close. It's at 107. But if you did sell puts yesterday, you may be up today. we'll still hold on target. We'll keep it on the list, okay? Next, let's go to our IV ring scanner that we use. We'll sort by volume. Spy first. And then we'll look at the cues afterwards. Could make the next move down. On the put side, if you'd want to sell the 396 and buy the 391, what do you get? Then it says 277 minus 221, divide that by 2, divide that by 500, 5.6 on the put side. On the call side, you'd want to sell the 449 and buy the 454. That's 160 minus 90. Divide that by 2, divide that by 500. 7% return on the call side, okay? What was the strike then? 449. 449 is right about here. Same thing, seems fair. Same thing with the Qs. This one seems a lot more resilient. On the put side, if you sold the 329 and bought the 324, 292 minus 231, divide that by 2, divide that by 500, 6.1% on the put side. It's down 1.25% today. On the call side, you get paid more. Sell the 385 and buy the 390. That's 178 minus 111 divided by 2 divided by 500, 6.7%. So either side, I have no bias on this one. You can sell both spreads, make it a condor, or just sell one vertical on either side. Yeah, I'm going to pass myself. Next, all right, so as we go down this list today, just remember earnings are coming up, so there's going to be a lot of earnings that we're going to have to skip over. Tesla, earnings on October 18th. That's about 2 weeks away. We'll skip that one. HYG, we looked at this one yesterday. HYG, down again. It's doing better than the TLT. 71. Look on the puts for HYG. You'd want to sell the 70. Not worth it. Buy the 70. Sorry, sell the 70, buy the 68. What do you get? 32 minus 15 divided by 2 divided by 200. Only 4.2% on the put side. Though remember, this is an ETF, so it's not going to be as volatile. On the call side, if you want to sell the 75, no, skip the call side altogether. Not worth it. Next up is the TLT, but look, volatility, IV ranks all the way up to 70 now. I know the TLT's down today. Yeah, well, that's a big move too. So like I said yesterday, and I'll keep saying it, when bonds move, momentum carries them. So let's look at the weekly. Where could we get a bounce? Maybe somewhere around 84. 83-ish. Wow, oh wow. So 84, 83, want to move past that for sure. On the put side, if you want to sell, yeah, look how far you can go. Tempting. Sell the 79. If you sold, you could even sell the 80. Now sell the 79. and buy the 75. What do you get? 57 minus 23, divide that by 2, divide that by 400, 4.2% return if you sold a $400 spread here. On the call side, sell the 92, buy the 97. That's 68 minus 17, divide that by 2, divide that by 500, 5.1% on the call side. Where's 92 on the chart? We'll go back to the daily. 92 is right about here. I would rather sell the puts, but not yet. It's getting there. It definitely has heightened volatility, which is what we're looking for. Next on the list, Amazon and Apple both have earnings coming up. About a month away for Amazon. Down today. On the put side, if you want to sell the 105, buy the 100. That's 113 minus 70. Divide that by 2. Divide that by 500. 4.3%. Not worth it because you're also holding through earnings. On the call side, sell the 145, buy the 150. Sorry, yeah. 149 minus 92 divided by 2 divided by 500. 5.7%. On the call side, not worth it. Apple. Earnings for Apple are November 2nd as well. I don't know. Sell a call spread maybe. Hopefully be out before earnings. Yikes. Sell the 190. You're not going to get paid for it though. Sell the 190, buy the 195. Yeah, that's 95 minus 49 divided by 2 divided by 500. 4.6, not good enough. On the put side, if you sold the 155 and bought the 150, that's 171 minus 114 divided by 2 divided by 500. Almost 6% on the put side. 155. That's all the way down here. I mean, it's fair. It's pricing and earnings. Let's skip it for now. Netflix earnings are on October 18th. We'll skip that one. Sirius, it's only a $4 stock. We'll skip that. Boeing. Boeing's got a little bit of a bounce today. Good. Still not very... Ugh. Earnings are the 25th. That's, what, 3 weeks away? Too close for us. We'll skip. AMD. Earnings are on Halloween. Little less than a month away. Sell the call side here, maybe. Sold the 120, buy the 125. It's got good liquidity. 180 minus 115, divide by 2, divide by 500. 6.5%. If you want to try to get in and out before earnings, sell the 120, buy the 125. I like this one. Where's 120 on the chart? 120 is up here. Yeah, this seems very fair. I like this one a lot. I'm going to... it's tempting. $31st. This one is tempting, but I'm going to skip it. Silver. I think silver's down again today. Oh, no, it's not. Flat. It was down at the open. It's come rallying back. May not have this bounce going on. On the put side, you got to get really close. Sell the 18, buy the 17. What do we got? 19 minus 8 divided by 2 divided by 100. Hold on. 19 minus 8 divided by 2 divided by 100. 5%, 5.5% return. On the call side, now you'll get run over. Skip it. Meta has earnings on the 25th. That's too close for us. Intel. We've been looking at Intel. I think earnings are coming up. DC. The 26th of our earnings, we'll skip that one. The KRE. We didn't look at that one yesterday. Let's look at the KRE. Down 2% today. On the put side, sell the 35 and buy the 33. If you got a small account, 51 minus 30 divided by 2 divided by 200, 5.2% on the put side. On the call side, sell the 45 and buy the 47. That's 38 minus 18 divided by 2 divided by 500. That's even worse. Don't sell the call side. But just remember, the banks, these small regionals and the big banks are going into earnings season mid-October here, end of October. So earnings volatility is being priced into these, especially on the downside, because we all know banks are going to be into a bit of a trouble as we keep moving along here. All right, wait for that sell-off in the banks and then go in and sell puts, okay? Hold. I know it's tempting, but you got to wait. Rivian. No, not Rivian. The XLU, the Utilities Spider ETF. If you want to sell the 51, buy the 45 though. Weeks 62 minus 12 divided by 2 divided by 600. Only 4% return on the put side. On the call side, we didn't even look at the chart yet. Hold on. Oh, man. Well, that's why. On the call side, sell the 60. Sell the 60, buy the 63. That's 57 minus 16 divided by 2 divided by 300. Is that right? You get almost a 7% return if you sell that spread. $56 minus 16 divided by 2 divided by 300. Yeah. That one's interesting. Where's 60 on the chart? That's why it's very close. So 60 is right about here. It's exactly there. So the calls are more expensive than the puts because it's moved so far down already. Pass on this one for now. Bank of America has earnings on the 17th. Google and Microsoft, their earnings are coming up too. Google's earnings are the 24th. Skip. We'll wait till after all these earnings happen and then we'll take a look. Same thing with Microsoft. October 24th. Let's skip that one for now. SoFi is an $8 stock. Pass. Wells Fargo Banks, UVXY. We looked at this one, I think, yesterday or last week. It's getting too low now. Ford. We haven't looked at the autos recently. How is GM and Stellantis doing? GM is down almost 3% today. Earnings are in the 24th, so that's not good. Looks like it's breaking down here. If GM can break down more down here, then would be the time to look at it. Puts are expensive. But if you wanted to sell the 27, buy the 24. 40 minus 13 divided by 2 divided by 300. Only 4.5% there. On the call side, if you want to sell the 36 and buy the 39 or the 40. If you sell the 36, you get 43 minus, let's go with the 39. Minus 13 divided by 2 divided by 300. 5% on the nose. That's like the bare minimum we're looking for. I'd still wait. Pfizer. Earnings are on Halloween. We'll skip that one. Block. Square. We opened a position yesterday. Earnings are November 2nd, a month away. We are down $9 already. But if you want to open a position today, obviously sell the 35, buy the 32.5. That's 91 minus 53 divided by 2 divided by 250. That's a 7.6% return. If you want to open this one today, still have my blessing. If you want to, you can even go out to 32.5 and buy the 30. Actually, that doesn't pay as well. Skip that one. On the call side, sell the 52.5 and buy the 57.5. 84 minus 40 divided by 2 divided by 500. Skip the call side. You don't get paid. Even though it's breaking down today, it should, if you look at this chart, it should get a bounce. 37-ish. What was our strike? Our strike is 35, so it should get a bounce at 37. I'm going to sleep fine at night. No worries on this one. Even if it doesn't, it should still get a bounce. It should still get a bounce by 32. Even before that, 30. Should get a bounce by 37. Okay. That's a long way from here. What's next? I think we're almost done for today. Nextera. 100% volatility. They must have earnings soon. NEE. Wowzer. Earnings are October 26th. That's why. But should get a bounce around 47, 46-ish. Yeah. On the put side, if you want to open a position, actually don't. You don't get paid for the put side. On the call side, no. You don't get paid on either side. Let's see. If you sold the 45 and bought the 42.5, very illiquid. 77 minus 45 divided by 2 divided by 250. 6.4%. It's not bad, but there's no liquidity despite, it's okay. On the call side, I wouldn't sell this one either. Skip this one. If it had more liquidity, I'd be interested, but not with those spreads. Schwab, small banks. October 16th is earnings. The XBI ETF. Okay, got some liquidity here. Let's take a look at the chart. On the put side, jeez, it's close. It's very close. If you want to sell the 65 and buy the 60, you're definitely going to get paid for this one. 114 minus 41 divided by 2 divided by 500, 7.3% return. So your return is great. I wish this strike was a little farther out. 65 is a little close for comfort, but it should get a bounce around 65. On the call side, sell the 77. You're not going to get paid for it, but sell the 77 and buy the 80. 68 minus 30 divided by 2 divided by 300. Actually, kind of do 6.3% return. Where's 77 on the chart? 77's right about here. I don't know. I'd rather sell the puts than the calls. That doesn't mean it's not going to keep going down. We'll keep this one on our radar. If it gets down to 65 or so, then I'd be interested in selling. But I don't want to sell here because you'd have to sell the 65, and I think you can get down there. If not, keep going further. So let's skip. It could all the way get down to the 64. Okay. Let's look at one more, then we'll call it for today. Let's make a good one. Goldman Sachs at 81%. Let's look at PayPal and Energy Transfer Partners, and then call it PYPL. Earnings are November 2nd. All right. Here's your chart. Didn't get much of a bounce after earnings. Wow, what an ugly chart. Let's look at the puts really quick. Saw the 47.5 and buy the 42.5. Liquidity is great on this one. 68 minus 24 divided by 2 divided by 500, 4.4% only on the put side. On the call side, sell the 67.5, buy the 72.5. 87 minus 40 divided by 2 divided by 500, only 4.7%. Wish we'd opened this one on the call side yesterday, but I don't think it was on the list yesterday. Hold. Last one. Nah. Skip Energy Transfer Partner. We already looked at GM. Morgan Stanley's got bank earnings. We looked at Uber yesterday. I think that'll be it for today. Verizon. Let's just look at Verizon's chart and make fun of it. Yikes. Horrible. Earnings are on the 24th. Too close. An 8% dividend yield. Horrible. What are puts like on this one? If you sold the 29 and bought the 27, 39 minus 14 divided by 2 divided by 200, 6.2% on the call side. Wow, it's expensive. I don't want to take that bet though. All right, I think that'll do it for today. Let's check on Coca-Cola. This one may get filled now, so we'll keep Coca-Cola open all day. You were risking $250 on a put spread on Coca-Cola. I think we'll sleep fine at night. 32. If this one does get filled, we'll put a close order, a buy to close order at 16 And we'll set that as good till canceled, okay? We'll check on it tomorrow. If it gets filled, great. If it doesn't, that's fine. We've got more we can look at tomorrow. If you like what you saw, keep watching every day, 7:15 a.m. on the West Coast, 10:15 a.m. on the East Coast. Subscribe. You'll get alerts on when we go live every day. Tell your friends if you have any to tune in. We'll all trade options together. Thank you very much, and we'll see you tomorrow.